What's up, guys? So today I'm gonna talk about a little trade recap. So I lost like $60 today, but I'm gonna be honest, the trade that I took just wasn't it. But I'm gonna show you a couple trades that I think you should have taken. Now we'll just get straight into it. Well, not really. Okay, so first I really learned about the market maker buy model, which is I never realized it, but it's pretty relevant in the market. And the way it works is so we have external liquidity and we engineer lower liquidity, bang, 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 and eventually we come down and we sweep it. Now where I messed up is I thought the sweep was off this, like this was the sweep pre-market, but it really wasn't, and the sweep was. So what I did is, the reason I took this trade is I'll get into it. So I'll go back to SPX. So SPX, I have the same setup, kinda, and I think this is the sweep right here, which essentially it was the sweep right here. So we can make this sweep. So that was the sweep right there. And I mean, the play would have been if you wait for high time frame, which I didn't, but would be off of the retracement into the 15-minute fair value gap, and then you would have really targeted some. But the real trade I wanted to take on SPX, but I had a rule where I didn't want to trade pre-market, but I mean here, it was here, this was the trade. So you see, we make the same thing, and you see we sweep the lows, and we create a 1 minute fair value gap. I'm looking at this pre-market, and man, I want to trade that. But I mean, as you see, pre-market, I think I need to realize that we're loading up pre-market. We come down, touch. You would say you entered right there. I mean, I'll go into replay. Say you enter off the first touch, and you set your take profits at the freaking external highs right there, and you hit play out, and say you set your stop loss below the low. As you see, then market comes open, boom, boom, rip. This is the trade I should have taken, right? Okay, look, frick. Basically, where are we at? Sorry, here we are. No more replay. But basically, then we sweep. The reason this area was so much liquidity is because it was three equal highs on the hour time frame, and that has a lot of power. So if you look, these were the equal highs right here. We come up, we sweep them, and we get a big drop. Now, the drop necessarily wasn't long on other time frames, but it was long enough to potentially get a play off the 1 minute. And the play you could take off the 1 minute is you sweep these highs, you consolidate, you sweep, you consolidate, big move down, displacement, 1 minute fair value gap. You enter right here and you just close, say I don't know, close at a 1-to-1. Maybe put your stops above the highs just in case. Say your stops right there just in case it's gonna rip up a little more. But essentially it went all the way down to here, back to the consolidation, which you could put your stops right here. So you could have traded up and then back down, which I found very interesting. But okay, so let's get back into the NASDAQ trades. So these external hourly highs, equal highs, get swept fairly early in the market open. But on NASDAQ, it's the opposite. As you see, NASDAQ open only sweeps one internal high. Okay, so we sweep this high, get rid of that. Now what I should have done is waited for the retracement, and I should have also used the confluence that SPX just swept very high liquidity 3 hour high, 1 hour 3 equal highs, and just swept it and move, and it's gonna move down obviously. So I should have been patient and waited for market to retrace, and this would have been the real sweep. Then you could have entered off the real sweep. You don't really create a fair value gap. You create one here, you could enter off that. You create one here, you can enter off that, and then eventually NASDAQ just rips. So essentially, my bias was correct, but I need to connect SPX and NASDAQ together and just realize, we get the crazy sweeps on SPX, but I didn't get what we wanted on NASDAQ, but we probably are going to retrace because SPX and NASDAQ move together, essentially. So I need to be patient. And as you see, you come down here. I mean, there's multiple plays. Like, there's the sweep, and then you could enter. So you could enter off that candle. We could go to replay. Like, say we're watching this form. Like, okay, we just swept. I want to see some rejection. Oh my gosh, displacement up. Huge displacement up. Fair value gap. Boom. Say you enter late. And we go back and we put our stops at the external, keyword external highs. See if we can get up there. That's $74. Okay. But like, and then say your stops are just below. What is this button? No. But then you hit that. See it play out. Bang. Could take off some position at these highs right here. Obviously we consolidate. Maybe let's play a little faster. Eventually we slowly move up. I mean, what is the risk reward here? So you went long off this. I mean, frick, that's freaking a 4 RR. Like, and hypothetically, you trim some of your position here. You set the rest at break even. Consolidate. You set the position and leave. Let it do its thing. I think it hits eventually. And look, eventually you get hit, and you get all of that. And that doesn't hit eventually at 1 o'clock, but you'd set your stops. So those are the 2 trades that should have been taken today. Well, 3 trades that should have been taken today. So I really just need to get more patience and more, sorry, this is my school stuff. More patience and more understanding. But that market maker sell model, market maker buy model, I like it a lot. I think it really like, it's kind of like advanced smart money concepts, which I think I needed. But yeah, I mean, CPI and PPI are tomorrow, so I'll probably, like, if I trade, it'll be really low risk just to see if I can. I'll still set up a bias and stuff, but we might not trade. We'll see. But I did end up losing $60, but I'm just gonna tell you the trades you should have taken. But yep, thank you guys so much.